So good morning, good morning. Nobody's in the room, good morning. More like it. I know it's business, but also work in the school district, so I always like to hype it up, so let's smile today. My name is Lanitra Barringer. I am the Director of Family and Community Engagement for Amarillo ISD, as well as I'm a coach and mentor for minority small business women in our community. And so today you are in access to financing. Raise your hand if you need to know a lot about financing. You're in the right room at the right time with the right people. So we are going to get started. This panel is for new and existing business owners who want to learn more about different types of financing options available, how to qualify, what can and cannot be financed, and how to make yourself credit worthy. So on the panel are 4 lenders with experience in everything from micro loans of a few $1,000s to multi-million-dollar business acquisitions. They do business locally and want to see you succeed, so be ready with your own questions at the end. We'll have 40 minutes of questions for the panelists that cover the most commonly asked questions they get. Don't worry, there's time for 10 minutes Q&A with all of you before we break for the next session. So briefly, will our panelists please introduce yourselves?
Hey everyone, my name is Rigo Zapata. I work with Amarillo National Bank. I'm a business loan officer.
I'm Brittany Rivera. I'm with PeopleFund. We are a nonprofit community lender, and I'm the senior loan officer.
My name is Calvin Davis. I'm the district director for the U.S. Small Business Administration, SBA. Who's heard of SBA? Oh, good. We'll have some educating to do. A few people haven't. Okay. But anyway, we help and support small businesses. We do it through many programs. One is our lending program, which we'll talk about today, but we have many other programs too.
Good morning. My name is Amy Henderson. I'm a commercial loan officer with Amarillo National Bank. My focus is on business customers. I have a couple customers in here, so I'm excited for answering any questions that y'all have today.
So thank you all for being with us today. We'll get straight into our first question. This question is for Rigo and Brittany. How do you think a business owner should start preparing when launching a new business or financing their current business? What types of startup costs can be financed?
I would say the first thing for starting or preparing to start your business would be putting a business plan together. I think just the business planning stage is so important before approaching a lender to know exactly how much money you're going to need and what your use of funds are for, what the market is, so much information that you're going to need in order to start the business. That's what I would say to start with.
So I'll follow up with Brittany and definitely say having a business plan will set you in the right path to start a business or finance your current business. One of the biggest things is, what is your startup cost? Are you going to be leasing? Are you going to be renting? How long is it going to take you to be profitable? That's when as you're building that business plan, you start asking yourself all those questions. One of the things I like to tell my customers is to the 5 P's in life, and I like to tell them to implement that into their personal life and also their business. And so the 5 P's are properly preparing prevents poor performance. And as you're doing your business plan, you start asking yourself all those questions that will set you up on the right path to start your business or get financing and take your business to the next level.
And also, Rigo and Brittany, what type of startup costs can be financed?
For me specifically, I could do working capital, equipment, furniture, fixtures, inventory, but we are an SBA certified lender, so we're not going to be able to do any type of real estate investment, properties, or anything speculative, I would say.
So on our end, we are asset-based where any type of loan will definitely ask for collateral. But if it's a smaller amount, we could definitely do unsecured loans. So any equipment, anything that has a serial number, VIN number, we could do loans from $0 to $1 million, even $2, $3, $4, $5 million. The sky's the limit. Proper documentation will get you there.
Thank you for that. So next, Ms. Amy, what is the process for financing equipment, particularly equipment that is costly like vehicles and construction equipment, or specialized like dry cleaning equipment?
That's a great question. Amarillo National Bank, we're asset-based lenders. We love stuff that we can touch, pet, and eat. So equipment is one of those things that we can touch and we can physically see it. The first thing is we want to find out some type of value. You know, what is the value of this equipment? What is the resale value? That way we can help so we know what the value of that piece of equipment. And we're also going to ask our customers what we call put some skin in the game. We want to make sure that you guys put some money down. Typically it's 20%. And a piece of equipment like that, we're going to finance it typically on a term note. Since that asset is, since that equipment tends to be a long-term asset, you want to make sure you have your balance sheets matched with a long-term liability. And then we match the repayment of that equipment along with your cash flow. So if you're in agriculture and you get repaid seasonally, then we'll set those payments up seasonally to make sure we match your cash flow. But the reason we want to value and we ask you to put money down is for some reason our job as a banker is to manage our risk of our customers' money, because the money that you put in the bank is what we lend out. So we want to manage that risk. And if we had to pick up that piece of equipment and liquidate it for some reason, we typically do not get pennies on the dollar. So we want to make sure that it has some type of resale value and we know how to resale it. But we want you to put a little risk into it with us and put some money down. So I personally love financing with equipment because I can touch it and feel it and see it. But we definitely want you to put some money in with it, and then depending on the asset is the type of term loan that we will give you.
Thank you for that, Amy. So, Mr. Calvin, I have two questions for you, sir. What is the difference between an SBA loan and a standard commercial loan? And what type of expenses and items can be financed with an SBA loan? And what businesses are eligible for SBA loans?
Okay, thank you for that question. So I wanted to start out by saying that SBA has many lending programs, and the basic commercial loan, you go to a bank, you get a loan, and they may give you 1, 2, 3 years. SBA is going to give you the same type of loan, but they're going to give you a longer period to pay it back. Hence, you're going to be able to have better cash flow. Now, the businesses that, when you think about SBA, you have to go to a bank. So we're guaranteeing the loan. We're standing behind the bank. People think, oh, you're going to guarantee me. No, we're not the co-signer for you. We're standing by the bank. So the bank then can possibly look at you a little differently and maybe make that loan that they wouldn't have made. But more so, it's a win-win for you. Okay, now I want to kind of just come back to that. But one thing that you may have heard about with SBA, you guys heard about the PPP loans during the pandemic. And I want to thank, first off, the lenders. Many of you lenders who participated because they put the money out there, we backed it up, we created the rules along with Treasury. So that was a huge program, as you know, and in fact, we had other programs. Our direct loan program is a disaster loan program, the EIDL loans, for example. So I want you to understand that's a big thing that we do, but the thing that you all mainly need to hear about are the 7A, our guaranteed loan programs. And that's the one, when I talk about commercial loans, they're not backed by the government typically, unless it's a HUD loan or something that's different. But SBA guarantees the loan. We back it. So I want people to know that. And so then the other part of the question, what can we do with SBA lending? First off, you have to be a small business. You heard about NAICS codes in the last thing about are you small? Most businesses are. In fact, 98% of all businesses in America are small, right? So most businesses are small. Then you have to be a for-profit. Nonprofits can't qualify for SBA financing, unfortunately. So small, for-profit. Also, the owner or the principals have to have a legal right to be here, a citizen, or you have a green card, or you have some visa that allows you to be here legally for the term of the loan. So those are the three main things, and we can finance almost everything. Working capital, equipment, land, and we'll give you a good, usually the interest rates it's pretty good. I mean, you look at it prime plus. We can't go over a certain amount, so we protect you on that end. We also have a big program called the 504 Development Company Program. Great program. You can get, in these programs, you get $5 million, in fact, $5.5 million in the 504 program. What is that? I want to buy a piece of property, land, to put my building in, put my business in, or a big piece of equipment. That's a beautiful loan because the bank is only in for 50% of it. SBA, we fund about 40%, and you come up with 10%. It's a great program. We'll give you either 10, 20, or 25 years to pay that back, which is better than conventional commercial loans. So there's a lot more to it, but I think I've probably said enough for now. We can
Yes,
get
sir.
questions later.
Thank you. So next question, Brittany and Rigo. We've talked about making large purchases, but what if someone needs a small amount, say under $25,000, to finance operating expenses? What options do you all have available?
So going over smaller loans, like I said before, we look at your credit score, over your tax returns, cash flow, see if you're able to make that monthly payment. But we can do unsecured loans. Obviously, we do want some type of collateral, but anything below $25,000, we'll definitely do unsecured.
So PeopleFund specifically has a program, an SBA microloan that we offer. And so this program with us is specifically designed for maybe someone who is weaker in some of categories but stronger in others. So we look at debt service coverage, collateral, liquidity, credit score. So if you're great in the credit area, you're good on your debt service coverage, you have plenty of cash flow, but you don't have any collateral and you don't have any liquidity, you can still get approved for a loan. It, again, is just a great way for business owners to be stronger in some areas, maybe weaker in others, and still be able to get approved for that with affordable rates.
Thank you all. So Amy, if someone has an existing business and they have need for additional cash to cover operating expenses, say during the initial phases of a large job, is a line of credit a good fit? And what is the process to secure a line of credit?
That's a great question. Lines of credit are typically for your short-term cash flow needs. And what that means is if you have a large job coming up that you need to buy material, that you have to pay your employees, and once this job is completed, then you get paid. So a line of credit's perfect for that, where you draw on the line of credit for the material or for your working capital, you complete that job, and then you turn around and pay off the line of credit. Lines of credit are great for carrying inventory and carrying for accounts receivable. And to qualify for that, you would sit down and talk to your banker, and we would talk about, I would like you to talk about what your cash flow looks like. I would like you to tell me, I have this large job, this is what my costs are, this is what my profit is, and this is how I'm going to pay the line of credit back. So that's how the line of credit would work specifically for contracts for a large job. But let's say you have some large accounts receivable that you have cash coming. We could take those accounts receivable as collateral as long as you're going to get paid within 90 days. And we want that line of credit kind of ebb and flow with your cash flow. So you have a customer that makes us a purchase, they're going to pay in 30 days, but you still have to pay for your inventory or material, you pull on that line of credit. Then we want to make sure that when you get your cash flow in, that you pay down on that line of credit. So you want it to kind of really follow your cash flow. And so when I talk to my customers, I really expect my customer to know what that cash flow looks like and be able to tell me, this is what my accounts receivable look like, this is what my inventory turn looks like, and this is how I'm going to pay the line of credit back. But lines of credit are perfect for your short-term cash flow needs.
Thank you. So this is 3 questions. I'll kind of let you guys answer, Brittany and Amy. What are some of the best ways a business owner can increase their credit score and overall credit worthiness? And will my credit score drop when credit is run from an application? And how do we recover when our score drops and the loan is denied? And also talk about the term bankable, what it means, and is it the same as being credit worthy?
So some of the best ways that you can increase your credit score and overall credit worthiness would be paying your bills on time, maintaining low credit utilization on credit cards, that sort of thing, not closing accounts. Long-term credit history, it's a great way to show that you're a trustworthy business borrower. And then monitoring your credit, making sure that, obviously if there's anything that doesn't belong on there, disputing it and just frequently checking on that. So the next question, will your credit score drop when your credit is run for an application? If it's a hard pull, yes. If you have a soft pull done, no, it won't affect your credit score. A hard pull typically is only going to drop it about a few points of maximum, I would say around 5. And the way to recover it is just, again, continue to make on-time payments, keep your credit utilization low, things like that. The last one, the term bankable, and is it the same as being creditworthy? So when I think of the term bankable, I think business that's able to receive a form of like traditional financing, so that has enough profits, assets, liquidity to qualify and cover a commercial loan. And whenever I think of creditworthy, I think your credit reporting, are you paying your bills on time? How often are you using your business credit cards? Do you have a strong credit history over a minimum of 3 years? I would say that's the difference for me.
That's a great answer, Brittany. When I have customers coming in, bankable and creditworthy, those are all interchangeable. When we look at our customers, we're not looking just at the business, we're looking at the overall relationship. We want the business owner to be creditworthy because then it makes the overall relationship bankable. So what that means is when I have a customer coming in, they want to purchase some equipment, or if they want a line of credit, we're going to look at the business owner. Does the business owner have a good credit score? I prefer 740 and above, that means you're paying your debts, you're taking care of your obligations. And what that means is, to me, if the business owner is taking care of their personal business, they're going to be more credit worthy to take care of the business itself. The last thing we want the business owner is to be in personal and financial trouble and pull cash flow from the business. So I want the business owner to be credit worthy, having good credit, paying their bills, and not having a whole lot of debt, because then we look at the whole big picture. Does the business owner have good credit? And then we look at the business itself. So all of that's kind of interchangeable. We want to look at the big picture. And so as a business owner, if you're starting a business, you want to look at yourself first. Make sure that you have your personal house in order, and then that way that'll bleed over into your business. So bankable means you have good credit, and that means you're credit worthy. So it all kind of feeds together.
Thank you for that. So you guys taking your notes? Keep writing. So next, Mr. Calvin, what is collateral? How does it work? And is it always necessary to secure a loan?
Okay, what is collateral? I mean, do y'all know what collateral? You probably already know what a collateral is, right? I mean, it's something that you own or have ownership right to, that you can pledge to secure the repayment of a debt. And if you don't pay it and you default, then that item can be forfeited. It can be taken back, okay? So that's collateral. Now, the question is, do you need it for a loan? Let's talk about SBA. SBA has very minimal collateral requirements. In fact, we say that if you don't have it, it does not stop you from getting a loan. However, it can stop a bank from wanting to give you a loan. Let's say a banker here, because if they're signed up to do SBA, and most of them are signed up, the question is that will they? That's another question. So they'll look at it and they'll say, okay, I don't think I'm going to take this risk unless you put up some collateral. You all know about the Texas homestead law. You know, your home isn't something you usually can use unless you're getting maybe a home equity line, mortgage, or some kind of improvement, right? But typically your home, don't think of that as a piece of collateral for a business loan. If you have another piece of property, SBA says if you have it out there, we want to take it, because the government wants their money too. We want to get paid back eventually. So the idea of having collateral requirement is not required, but if you don't have it, it gets a little dicier, okay? We can still make the loan because we do not have a strict equity requirement anymore except for startups. I mean, equity. What is equity? I want to kind of distinguish that. Equity is what you're putting in. It could be collateral, but it's also cash. 10% is what we need for startups. The lenders want 20 or 30% typically. But for SBA, if they go SBA, we only require 10% for a startup. If you're an existing business, you don't have to have equity. You don't even have to have collateral. If you can pay it back, repayment ability, can you pay it back? That's the number one thing. People say, I have a great idea. Oh, man, I have a great business plan. But can you show through maybe contracts or maybe through history of what's going on in the business that you can actually pay it back after your expenses? You know, if I'm going to have a $3,000 a month payment, do I have the net profit to pay that loan back? So that's really a key factor. I think I probably answered that. What's the rest of the question? Did I hit it?
Yes, sir. You
Okay,
took
good.
care
I'll
of it.
stop there.
you.
Thank you.
So, Amy, in what situations can personal property be used as collateral? What types of personal property can and cannot be used as collateral?
So typically, you want to separate your business assets from your personal assets. But if you're in the startup phase, if you're within the 2 to 5 years of your business and you come in for a loan, you have some purchases you want to do or you need some working capital, all banks want collateral of some sort. And sometimes we can get pretty creative. We can take your personal vehicles to shore up a business loan. So we can look at personal assets being maybe you have a trading account and it's pledgeable, so we can take those shares as collateral. Personal vehicles, we can take those as collateral also. In the beginning, that's what you want to be able to be willing to pledge to get your business off the ground. And then once the business has, 3 to 5 years of track record that shows cash flow and it shows that it can make those loan payments, we can switch over and look at just business assets. But in the beginning, I'll take vehicle loans. Vehicles. We'll take your like Edward Jones or whatever. If it's pledgeable, we'll take CDs. I love CDs because that's cash. The stuff we can't take, we're not a pawn shop, so we can't take like jewelry. We can't take that kind of stuff as collateral. We can't take your home as a loan either. But if you're looking for some cash flow to jumpstart your business, you can look at a home equity line of credit to pull the equity out of your house to invest into your business. But we can definitely take personal assets to kind of get a little creative to help you. If it's a good loan request, we can take those assets as collateral.
Thank you, ma'am. So, Rigo and Brittany, what is equity and how much of it is needed to get a loan?
So equity is an asset that you could definitely liquidate into cash. Say you need a smaller little loan, like I said, we could definitely do unsecured, but if you have an asset that we could liquidate, we could lend you up to 80% of whatever the asset value is. So it's something that you could use to better help you collateralize and be able to get you approved for a loan.
So with PeopleFund, we're obviously a different type of lender. We're typically when you can't get traditional financing from a bank, so we try to be willing to take a little bit more risk, I guess you could say. So our equity requirements would be up to $50,000. We would require a 10% owner equity injection to show that you are confident and committed to your business, and that you're willing to put your own funds into the project. Anything above $50,000, we're looking at 15% owner equity. And again, that's going to be on the total project size, not just the loan amount. But yes.
Okay, thank you. So, Amy, this next question is for you. Many business owners don't realize that they can do more with a bank than just open a business checking account. They can have a business banker who works alongside them. How do you find a business banker and what services can they offer business owners?
That's a great question. All community banks here, especially in Amarillo, want to be a relationship based. So that what that means is we want to build a relationship with our customers, so you can tap into our expertise. So me personally, I like to be my customer's personal banker, and what that means is you all are busy running your business. You don't have time to get transferred all over the bank to put a stop payment on the check. You don't have time when you have fraud or cybersecurity issues happen to be transferred all over the bank. So I have a great team put together at Amarillo National Bank. Most community banks do that too, where you have a person that you call or their assistant or a different person there at the bank, and you call them and say, hey, I'm having this issues, can you help me address them? And also having that relationship with your banker is that you have a big project coming up and you're thinking about, is this a good opportunity for you? Now, you can go have coffee with your banker and say, look, I'm looking to think about this next project I'm doing. What are your thoughts on it? And we could talk about, because we're all about the risk of that project, how we can help you finance it and go towards the closing of, purchasing a new building, that new expansion. So we're here to walk alongside of you and build those relationships also. Another good thing about having a banker is maybe you're looking for insurance. Maybe you're looking for another, insurance or some other type of aspect. We know a lot of people in the community where we can refer you out there. Maybe you're looking for a CPA. Maybe you've had an internal bookkeeper and now you want to make the jump and you have to have a CPA. We know all the CPAs in Amarillo. We know all the attorneys in Amarillo. We can help you kind of find the best person that's going to fit your business. So you want to surround yourself with expertise and having a banker that can walk alongside you and not just have the relationship, but we end up being like long-term friends too because we're so connected all the time. So having a personal banker is important because as you grow your business, you'll be able to lean more on that banker and their expertise.
Thank you, ma'am. So Brittany, grants are almost exclusively for nonprofits and a few that are available for for-profit businesses are highly competitive. Are there alternate financing options, particularly for women, veterans, and minority-owned businesses?
Yes, so the first question, grants. PeopleFund, as a nonprofit community lender, we are constantly trying to find ways to be able to provide grants to business owners, especially since the pandemic. One of the programs that we're running throughout the state, throughout the year, every quarter we are doing different locations that we're in, is a BIPOC accelerator program. And so what that is, BIPOC is for Black, Indigenous, people of color. And this is an 8-week education course. You can go through, get a loan, and at the end of it, you'll also get a 10% grant. And we have other opportunities that we participate in with grants all the time. You guys are more than welcome to check out our website, peoplefund.org, and see we post other grants as well, or grants.gov, I want to say. Also another great resource. As far as alternative financing options, particularly for women, veterans, and minority-owned businesses, that is our target market. We feel like those individuals are specifically underserved in our communities, and so we try to meet the needs. So not just with like our BIPOC program, we also participate in a Tory Burch program where on the first $100,000 that's borrowed, if it's at least 51% women-owned, it will buy down the interest rate by 2%. And so yes, veterans do get a special rate on all of our products. But yes, we have all sorts of different things, and I'm happy to share my information with anybody that is looking for more on that.
Thank you, ma'am. That's some great information. So make sure you're taking your notes on that as well. Mr. Rigo, a concern expressed by some minority entrepreneurs, particularly those with names that reflect their ethnic heritage, is being denied financing based off of their name alone. How can these business owners ensure that their loan applications are reviewed fairly? And what recourse do they have if they feel they have been discriminated against?
So here at Amarillo National Bank, we practice fair lending every single day. So no matter where you come from or where you are, we're definitely going to lend to you. We look at your tax returns, profit and loss statement, balance sheets. Those are the things we look at, not just by your ethnicity. With that proper documentation, you'll be able to get approved for a loan no matter what you look like.
Thank you so much for that, sir. So if you have questions, minority business owners, about that, come speak to Mr. Rigo afterwards. Miss Amy, we've talked a lot about financing to start a business, but how does financing work when buying an existing business, and what kind of documentation is needed?
So purchasing an existing business is almost very similar to doing a startup. But with an existing business, there is a financial track record. So if you came into my office and say, look, I would like to buy business ABC, I'm going to ask, why do you want to buy it? And why are they selling? And the reason I'm asking that, I want to make sure that as a new business owner, you have the expertise to run that business. And then my question is, why is that business selling? Are they retiring? Are they moving? Is there illness? Is there something wrong with the business? That's why they're trying to sell. So we're going to kind of really start digging deep into both the existing business and you personally. So you personally, like I said before, we want to make sure that you're financially strong and that you're bringing some cash to the table. that you have good credit score, minimum debt, and that you have some cash to put down towards the business. Just like buying an asset, we're going to ask you to put some skin in the game, a minimum of 20%. And then we're going to look at the business. With Amarillo National Bank, we're asset-based lenders. So what that means is what assets can we take as collateral to help you purchase that loan, purchase that business. And if there's a shortfall, which sometimes there is, because this business has value, a lot of it because it's the name of the business, that's called Blue Sky. We as a bank have a hard time lending to that blue sky. So you as a business owner, you want to make sure that you have the equity to purchase that blue sky, and then we finance the assets for that purchase. There's a lot of different ways that you can buy an existing business. They can do owner finance, and we can do some of the assets. So there's a couple different ways that you could do it. You could look at doing an SBA loan to help you purchase that business. But the straight, easy part of it is, does the existing business have enough cash flow to service the new debt that you're going to have? Are you personally secure enough to own the business? And what expertise are you bringing to the table as this new business owner? A great place to start is with a business plan, because that way you can take their business, their financials, do some projections, look at the cost of purchasing that business, and do some projections. And then it really allows you to kind of shop the loan a little bit. Every commercial bank in Amarillo has a different lane they like to stay in and a different way they like to finance it. So you may not be a good fit at Bank XYZ just because it's not something that they're looking for, but maybe you come see me at Amarillo National Bank, and with that business plan, it has everything spilled out. It helps us understand the purchase a lot sooner. So there's a couple different ways you can kind of purchase the business, but the first thing is knowing the cash flow of the existing business, and then making sure that you have cash to bring to the table and that you're personally financially strong.
Thank you for that. So, Mr. Calvin, what are the popular SBA loan products? What are the advantages of each? And how can entrepreneurs access those options?
Okay, so I don't want to reiterate too much about what I talked about earlier, the two major programs, but keep in mind we are a 7A guaranteed lender. That's the big program, the 504 program. These are all our guaranteed, the first one's a guaranteed loan program. The other one is a different type of program. But I really want to concentrate on something, though, in terms of accessing the programs. It can be a win-win, because for you, again, if you go SBA through a bank, and I'm going to take a minute, the bank, again, has to be one who understands what they're doing. Some banks don't. We have a list in the Amarillo area of the banks that are active in our program. In every area, and we cover 71 counties, we have a list of active banks. If you have a problem with your internal organs, let's say cancer, you don't want to go to a dermatologist. You want to go to an oncologist. You have different banks that do different things. You want to go to a bank that is adept and understands how SBA works. Why is that important? It's important to you because, again, you're going to get a longer period to pay it back. You're going to have that's the number one thing. You're going to get a competitive interest rate, of course. Competitive, I'm saying. I don't want to talk too fast. And the bank actually has a benefit. And some of the rural banks in particular don't always get it unless you talk to the president. Anytime a loan is made, a bank has to reserve money in their loan loss reserve. The SBA guarantee portion does not have to be reserved. So many of the smaller banks who are up against their lending limit, they have a maximum amount they can lend. That doesn't count against their maximum lending limit, and they don't have to reserve money. So it can be a win-win for the bank, and they can sell that loan in the secondary market, still service you. There's a great benefit to the bank. So being educated as a consumer is important, but understand that for you, most of the time, not all the time, it works for you. If you already have plenty of money, you don't have to go SBA. I mean, you can pay it back and quickly or whatever. But I think most people are in the position that I'd like to stretch it out because I don't want to have a big old payment. I do want to say something. I know Brittany talked about grants. I've worked on the East Coast, West Coast. I'm an attorney also. I've worked hands-on in the disaster department. And people always think, I can get a grant from SBA. Most of the time, 99% of the time, there are no grants truly for a startup business, for-profit business. I don't want to break your heart, but it's truly true. You have some great organizations like PeopleFund who will have like the BIPOC program. I know the Texas Women's College, they have something going on too. And every now and then, you have a veterans program that'll do a grant program. But I don't want to break your heart. I've been doing this for over 30 years. by and large, there are no real grants for startup businesses. There's an exception that happens out there every now and then. SBA has an exception. We don't give the grant out, but it's called the Small Business Innovative Research Grant, SBIR grant, or the startup grant. The other, we have a couple of them, okay? And that's for innovators. If you have a product you're trying to innovate, and I see my little sign for stopping real quick, but I will, okay? But I mean, this is important. That if you're an innovator, there are grants that we actually monitor that can be given to you, but they're primarily to universities for research. Okay, so I kind of want to put that out there, but keep in mind we're a guaranteed lender. You do have to, something you said, you do have to have that skin in the game. So save your money. You got to have that money. You can have a great plan, but if you don't have the capital, then it's going to be a problem.
Thank you, sir. So before we ask a few questions of our audience, I'm going to ask each one to briefly, in about 15 seconds each. This is our final question. 15 seconds, please. What is your best tip for anyone who might be seeking financing this year?
The best tip that I could give is don't be afraid to ask questions. As a small business owner, you are the CEO, the chief everything officer, so you definitely always want to have a plan. Don't be afraid to ask questions. There's a lot of resources out there that could help you out.
Thank you.
I would definitely piggyback on that with your resources. Reach out to local resources. To piggyback off of Calvin's previous question, how can entrepreneurs access options? There's a great, SBA has lender match. You can also go on there and see the lenders that are available to you that are going to meet your needs.
Thank you.
If I can do this in 15 seconds, I'm going to say save your money, have that equity, but also have a plan, P-L-A-N, a plan, P, put pen to paper, L, listen, learn, A, ask, question, and act, N, never give up. You may have to pivot, but don't give up.
Thank you, sir.
Well, I'm going to back that up with Rigo's 5 Ps. Really, if you're thinking about starting a business, or if you have an existing business and you're seeking out financing, do the 5 Ps. Properly prepare prevents poor performance. If you're going to come talk to the lender, we expect you to know your industry. We want you to know your cash flow, how the business works, and how you're going to repay the loan. So really the burden's on you to really know what you're asking for. But always ask for questions too. I mean, we're definitely here to help, but we want you to be the expert in what you're trying to do.
Thank you, ma'am. So we're going to ask 2 questions. Who has the mic? Anyone? No. Use that one. Thank you. So anyone have questions for the panel? There are 2.
Okay, if you already have an existing business and you need a loan to expand, can you use, and you own the business, can you use that as collateral?
I'll go ahead and answer that. So what you want to do is know your balance sheet, know your assets, and if the business is free and clear, you definitely can leverage your existing business, but the assets of the business. So that, as a traditional bank, that's what we're going to look at. What assets can we take as collateral to help you with the expansion?
Thank you.
I'll say for us, we're also, PeopleFund, we're also going to be looking at stuff like that, but we're also going to see looking at your tax returns, what are what's your net income coming back on? Are you profitable and things like that as well?
Thank you.
Hey y'all, so I am a small business owner here. I'm an entrepreneur. I also work or whatever, but my money don't run long. I don't even know if currently I have 10%. So this would be to like Kevin, an entrepreneur as myself, and my business does good. It really does. Like financial is my biggest problem right now. Like, and everything y'all saying is like credit score, equity. You know, I do own a home, but I don't want to put my home up for collateral. Like, seriously, how can y'all help me financially? Like, I got a good thing going, and that money is just holding me back from getting my business up off the ground. Like, I'm dying here, you know, to get the funding I need to get my business up off the ground, which has been running for a year this month.
Okay.
So
Help.
I will say, again, that would be plugging in with your resource partners. SBDC is really great putting together business plans. Even though you're existing, it sounds like you're needing to get some innovative ways to maybe, I don't know what your business is, but maybe bring down your cost of goods sold or whatever it may be, but looking at that and having somebody help you put a plan in place to be able to build up that 10%, 15%, whatever it may be, to then have that, to then go and get the financing. And I think, again, just the resources that are out there to be able to help you know what you can and can't do and what options there are.
Correct. This will be our last question.
In an era of technical advancement, how are banks evolving their lending practices for companies who provide SaaS products and our primary assets are intangible?
That's a great question. Every commercial bank's a little different. And I can only answer to Amarillo National Bank. Amarillo National Bank, we're a traditional lender where it's still hard to lend to service-based businesses because we still want those hard assets as collateral. We can look at doing some lines of credit and a certain amount unsecured, but it's still difficult to do the intangible assets because we haven't figured out a way yet how to put a lien on those, and we can follow UCC and how to. So it's all about managing the risk. So if you moved to Belize and your business went south, how do we get that collateral and how do we resell it? So the banks are kind of struggling with that right now to kind of figure out how to do that. So Amarillo National Bank, we're going to want those hard assets, and that's where we get creative and maybe take personal assets, not necessarily the home, but maybe you have some CDs or maybe you have some vehicles where we can get over that hump. But when you get into a larger business, it does get a little difficult, but that's where the PeopleFund and the SBA can help with that and help shore up the difference.
Yeah, I'll jump on that. None of our products are going to be required to have collateral. We don't require that. So like even with the microloan, you're not required to have collateral or a certain amount of liquidity or a certain credit score, things like that. We offer the 7A Community Advantage, which is sort of a pilot program of the 7A. But we have other ways to, if we can show that you can mitigate the risk of not having those tangible assets, we're still able to find creative ways to lend to businesses, especially since we'll have SBA backing and guaranteed on there.
So I'd like to thank all of our panel speakers today. If we could give them a round of applause for taking their time out. Yes, Ms.